Now, I know you're thinking this sounds like a get-rich-quick scheme, but we want to emphasize that you can turn $100 into $1,000,000. This method isn't fast, but rather is built on hard work, discipline, and the drive to keep going at it despite unforeseen changes. This is Income Intelligentsia, real-life tips for practical and financial targets. As a result, it's difficult to maneuver through the world without knowing enough about how money works. And it's no easy feat either. Not only is it rigorous to go through, you'll have to know how to get from point A to point B. The world today is fast-paced and the financial world changes every day. That's why equipping oneself with the proper financial knowledge and skills is crucial to ensuring a stable future. The information you get from knowing things about traditional investments like stocks, real estate, crypto, all that good stuff is important in understanding how your money can work for you. Understanding personal finance and strategies can be a lifesaver. It empowers you to make informed decisions about your money and lets you build wealth off of little things that you learn over time. Investing in personal growth and financial literacy is only the first step. But assuming you already know that, we want to stress our next point, that it's adamant that you have a fallback savings account before you start turning your money into profit. We talked about the importance of a good savings account in our previous video. However, we want to brush up on it real quick here. What we want in a savings account is something with a high interest rate. It's important to know that while the value of money depreciates over time, we want to be able to mitigate it as much as possible. The importance of having a good savings account is having money readily available to you and the unforeseen event that you'll need a financial life raft. That said, we want to be able to make sure that our money works for us, so we've included some examples of investment opportunities that you can pursue in order to do so. Gold. One of the safest investments out there is gold. A lot of investors turn to gold to make sure that their investment is safe. Gold allows people to decrease the risk of their investments by adding an extra option for investment, thus diversifying their investment portfolio. Because gold behaves differently from other stock opportunities, you're allowed a potential hedge against the volatile nature of the stock market. Because gold is a liquid asset, you can easily buy and sell in various financial markets worldwide. And it's not hard to find a buyer for gold because it's in demand in many different sectors, from central bank reserves, technology, and jewelry. Gold is everywhere, and it's hard to dispute its value when it's so readily needed everywhere. Despite all the positives about gold, however, there are some downsides to it. Turning a profit from gold heavily relies on its price and does not generate any form of dividends as stocks would do. While it wouldn't be as affected by the stock market's prices, gold's prices are volatile as well. Because gold is physical, you'll need to be able to store it somewhere, thus spending money to be able to preserve and secure it. Despite all that, gold has historically been a form of currency and has maintained its value for many years. As good as gold is, we want to be able to diversify our options. Well, we wouldn't want to put all our eggs in one basket only to find out that the basket couldn't handle all of it. That said, next on our list of options are ETF funds. Exchange Traded Funds, or ETFs, typically hold a bundle of different stocks. So by nature, it's diversified by itself. You're lowering the risk of losing your money because you've invested in so many different things. It differs from single stocks and bonds where the risk is heavily concentrated on one thing, as opposed to having it spread out into many different things. ETFs are also traded on the stock market, so it's liquid and you're able to buy and sell immediately as long as it's during market hours. Another good thing about ETFs is that the companies involved are as transparent as they can. It allows you to make better decisions about what you want to put your money into. One of the other things involving its low-risk nature is that ETFs have no minimum investment. Because investing your money can be fairly scary for a newcomer, it's beneficial that you're allowed to invest as little as you can to get you started. Some ETFs even allow you to reinvest your dividends automatically, so you don't have to micromanage every little thing involving your money, and you can just watch it grow from the sidelines. That said, Most of the managing in ETFs can be done through a brokerage account in which you can invest with low amounts of money. If you're new, some of them even offer financial advice and their takes on what kinds of stocks you should invest in. Accessibility is the name of the game with ETFs and is one of the better options for newer investors. However, as with gold, ETFs also carry downsides. ETFs, unlike gold, fluctuate with the stock market and as a result are subject to changes. If the market goes down, your investment goes down with it. ETFs, being managed by a brokerage, have their maintenance costs too. The fact that you are leaning on a service that manages your money means that brokerage fees will need to be paid on top of their commissions. ETFs with dividends may have changes in their dividend yields over time. If the company you've invested in decides to change how they pay out their dividends or even eliminate them entirely, you lose out on a passive stream of income, thus affecting your investment. That said, ETFs are still a wonderful option if you're starting out and trying to figure out how to maneuver in the financial world. However, if you're interested in a more intimate and more personal take on how to make your money work for you, perhaps starting a business would be more your speed. Now, there are a lot of different types of businesses online nowadays, and with the advent of social media marketing, you have a lot of options to go for. However, what we want to talk about specifically here is buying and selling online. Most people nowadays take to the internet to buy and sell different things. It's convenient, it's available 24/7, and for the most part, it's accessible. If you're someone that's knowledgeable about your products, it's not a bad idea to take it online. You can have a wide selection of products for minimal operational costs. It's easy to compare prices online, and you're allowed to market yourself more through buyer reviews and ratings. You as the seller are also allowed to do it at the comfort of your own home. That being said, it does take a bit of manpower to operate everything. While transactions can be seamless, there are still dangers in selling things online due to the anonymous nature of the internet. It's easier to defraud someone online due to the lack of proper inspection of the product or its packaging. That said, while it's a flexible way to make your money, it will always come with risks, but with proper assessment and practice, it's possible to reduce it to an amount that you can be comfortable with. Now, to summarize, our main points are investing in yourself first, making sure you have a proper savings account to lean back on, possibly looking at gold, ETFs, and having an online buy and sell business. Now with those things, we believe that we can start off well with ensuring that your $100 becomes $1 million. If you enjoyed this video and found us helpful, please hit the like and subscribe button. We'd like to be able to grow alongside you, and we're pumped to have you in our next video. Stay mentally healthy, and let's get financially fit together.